Hi, everyone. Like Max said, my name's Isabel. I manage the campus recruiting program here at Insight. Super excited to be hosting this event with you all, and we have a fun presentation that we've lined up for you all. Before we get started, I'm going to hand it over to our presenters. Michael, do you want to kick it off? And then Troy and Josh, you can follow suit.
Yeah, thanks, Isabel. My name is Michael Parker. I'm an analyst in the investment team here at Insight. Actually participated in a program called SEO, just similar to WayUp, but just happy to be here and help any way I can.
Everyone, my name is Troy. I'm a first-year analyst on the on-site team from Chicago. It's great to be here.
Hey everyone, I'm Josh. I'm a senior at Duke, worked at Insight last summer and going back full-time in September.
Right, so we'll just kick things off kind of with an overview of Insight Partners. So, I know it's not too much of an interactive session at the start here, but just kind of sit and think and wonder about what comes to your mind when you hear venture capital and private equity. So for a lot of people, it's probably Shark Tank. I know that was my first experience to venture, and the idea of people taking companies, pitching to investors, just looking for funding as they grow. And, there's a lot of drama in that show, a lot of drama in like TechCrunch articles, Axios, Parada. And while things might be a little intense on the TV or in the news, it's still really interesting and super fun to get involved, especially at the start of your career. So Insight, which we'll get into a little bit more, we are a pretty big growth equity fund, or at least that's where a lot of our history is from. To this day, we invest pretty heavily Series A to IPO, which means we basically cover almost the entire range of private investing. So the firm's been around for over 25 years, gotten over 50 IPOs and over 30 billion in capital commitments. So to dive into like what a scale up is, it's a little bit of jargon that's kind of shared around in the tech industry to differentiate kind of the lifespan of a private company. So everyone's familiar with the term startup, but that could mean, 100 different things. And when we use the word scale up, we're pretty much talking about a company that's been around for a while, has kind of found that product market fit or knows who they're selling to, has kind of found the speed and momentum for them to grow. And they're able to hit that inflection point and just grow a ton in the next few years. That's where Insight kind of got started, and where we still specialize today is dealing with those companies that are in the process of scaling up. So just a quick explainer on how venture capital and private equity work as a whole. A venture capital firm will raise money from investors, institutional funds, high net worth individuals, and then all of that money gets put into a fund, right? And we use the term fund to refer to Insight. We could also use it to refer to our investment vehicles themselves. But when Insight has that fund, they will then use that money to invest it directly into startups that we interface with, on the daily. We pretty much get the money, invest them in companies that we think have the potential to grow exponentially over the next few years. And when those companies see a lot of growth, participate in more investment rounds or exit through a variety of different ways, that's where Insight will make a lot of money, as well as our investors. So this is just a quick slide kind of explaining again what I touched on earlier, where Insight was a growth equity firm. You have a bunch of different types of venture capital firms. It's grown a lot in the last couple of years, but the big names you probably heard, Sequoia, Union Square, Andreessen and First Round are kind of those traditional venture capital firms as it originally started. So investing in like the seed, Series A stage, early stage companies. And then you have the ones that are specializing in those scale ups I mentioned earlier, Insight, Excel, Summit, Bessemer. So after those companies find product market fit, growing a lot in the next couple of years, and then as they mature more, that's when you get into that traditional private equity. So again, giant names you've probably heard of, Thoma Bravo, KKR, Blackstone, Apollo. So there's a lot of different stages you can work in the private investing field. And then last one before I hand it off to Troy, you can really, I think, learn a ton at your time at Insight, especially as an analyst. You're talking to tons of founders every day. you're cutting data, looking through data rooms, doing a lot of quantitative analysis, and you're also developing a thesis. So when you're sitting there wondering, is this a good startup? Can this be a big market? How am I going to pitch this to my MD? You have to sit there and think on answering all those answers for yourself. You can't go to your associate and just basically say, hey, let me copy what you're thinking. You have to be able to build a conviction, build a thesis, and present it from there. And then the last piece, which I think is super interesting, is we all start as generalists here, but you're able to pretty much pick what industry you think is really interesting. So you can look at different verticals. If you like fintech, if you like healthcare software, biotech, you pretty much have free reign to talk to whatever you want and learn a ton about whatever given industry. So now I'll just pass it off to Troy.
You guys have probably heard of Satya Nadella before, but he has this quote: every business will become a software business. And that's kind of in our DNA at Insight. We love our software. So why do we care about software? Because software is really just fundamentally disrupting the way the world works. I mean, you have traditional players, software players like Venmo, Lyft, and Grubhub, which as consumers, you all have probably heard about. But what's probably lesser known is that these legacy industries and legacy companies, old ones like Goldman Sachs, Ford, even Domino's, they're all digitizing and they're all trying to implement changes to their software in meaningful ways. And because software touches every company in the world, old or new, so does Insight, just because we care too much about, not too much, just enough about software. There's over 400 growth stage investments that we have across 5 different continents. And we're basically touching every corner of the world here. You see some in North America, South America, Europe, Israel, Asia Pacific, as well as Austria and New Zealand. And we have a great track record of success. So with over 25 years of experience in the industry, we've made over 400 primary investments, deployed over $30 billion capital, 50 plus IPOs, around 11 in this past year alone, 200 led acquisitions, 125 plus strategic exits. So to really drive home this point, we care so deeply about software. It's what we're passionate about. It's what we live and breathe. It's what we seek to understand at a very fundamental core level. And it's, our deep expertise. There's 2 parts of Insight. There's the investment team, and there's also the on-site team. So the investment team, and Michael will touch more on this briefly, is comprised of a sourcing program that identifies these incredible companies that we eventually make investments in. And then the on-site team works with these companies to scale up and really take off. What's interesting about Insight too is we are committed to diversity. And this is just a couple examples of how we've been trying to really make an impact there. But in late 2019, we hosted a Women's Tech Leadership Summit in New York City, bringing together over 300 female leaders across different interests and passions and in the tech industry to really create ongoing solutions for inclusion. We've also held another Executive Leadership Academy in October 2019 to provide female executives from our portfolio companies with resources and a network to continue their careers. So although nothing has happened in the past year, as I'm aware, because of COVID, this is something that's extremely important to us and is something that we're going to look to do more of moving forward. Our core values can really be tied together by 5 things: hunger to win, heart, creativity, continuous reinvention, and scrappiness. At their essence, what this means is we want to win, we want to succeed, and we want to do it in the right way, not only methodologically, but also investing in good companies that are helping the world. We want to do it in ways that are different from other investors and be creative. And we're committed to continuously iterating, whether that's on the ways we approach different problems and thinking about companies, but also taking on a sense of entrepreneurial spirit to better understand not only how we can change our own processes, but how we can better understand the people that we invest in.
So yeah, moving on to the investment analyst program. I summered at Insight in the summer of 2020. So, that was the first COVID summer, unfortunately, but it's a 10-week program. It's a sprint and you spend a lot of time just talking to a lot of founders, trying to identify really cool companies, putting them in front of your team, putting them in front of the investment committee, and hopefully being able to get on a deal. So as you can see from the timeline right here, what's in the dark orange is pretty much everything that's 100% on the analysts, which I think is pretty cool. It's all on us to reach out to founders, talk to them, learn more about their business, develop the thesis, and then after we pitch, we're able to get a little bit of help here and there on analyzing the data, deciding if we should invest in the company itself, and then post-investment doing M&A projects, portfolio company work, different things to help the companies grow and then get to a great exit. Over 70% of Insight's deals have been sourced from an analyst. And then what goes into that is pretty much some things we touched on earlier, just researching the industry, reaching out to founders, and then hopefully going through to close the deal. So this slide is a little bit outdated, but the analysts, without a doubt, are the foundation of everything that happens at Insight. We've grown a ton in the last couple of years, but the way the teams are formed, the way everybody works together, we've still been able to maintain that pretty collegial environment and kind of feeling like a close-knit team, no matter which team you're on. So the analysts really spend a lot of time, like we've said, reaching out to founders, just developing a thesis, and then kind of presenting to the rest of the team. The associates and VPs kind of come in to help with deal work, follow-up calls with entrepreneurs, kind of putting the finishing touches on things. And then principals, partners, and MDs are there just for deal execution. So a lot of the foundation is built on the analyst work. So a day in the life, the good thing about this, which I think is funny, is this slide can be different for anybody. Something I really enjoy about Insight is the autonomy to kind of run the job how you need to. So a lot of people do it differently, but for example, what I'll do is wake up pretty early to go work out, schedule maybe 6-7 calls in a row with founders in the morning, and then just rip through all of them from like 9 to 11. So then it's still early in the day, you've gotten all of your calls done, maybe block out some time from 11 to 1, go hang out, go eat, meet with other analysts in your class, something like that. And then the rest of the day, you can just spend sending emails to founders, scheduling stuff for the next week, reaching out to other investors. If you're able to stay organized, stay on top of your schedule, be kind of disciplined with what you're doing, you can make anything out of your schedule, which is something I really appreciated, having worked in consulting and investment banking in undergrad. Just having this flexibility is not something you can really get at a lot of other finance jobs.
Yeah, Michael, just kind of going off that, that's something I really appreciated as well. I think it's like really, it's like almost like can't take it for granted, but working at Insight this summer, if you want to have a dinner at some time, you can do that. You can work around it. You're not waiting for anyone to say, hey, can you please fix this or do that? It's really kind of all on your own. It's really a self-starter type of job, and you're really able to control that. Like I remember this summer, I had a wedding that I had to leave, like 4 or 5 o'clock for. And I just talked to my first year analyst. She's like, of course, like just go, no big deal. And, you'll make it up at a different time. But that's just kind of how Insight's analyst structure operates.
So then the last thing I'll cover again before Troy will speak about kind of our on-site team is this case study for Shopify. The reason this was included is, as you all know, Shopify is a pretty large company now. And the way this deal was done at Insight was kind of our typical model. And analysts reached out when they were starting out. The company was hard to crack, which means just like hard to get in touch with. The founder might not have been answering. So the analyst spends time just like learning about the space, getting some expertise, continuing to reach out. And then eventually they were able to. First conversations with the CEO happened in 2012. So throughout the year, the analyst just kind of has those quarterly check-ins, talking to the CEO. Hey, how are you? What's going on? And the story I heard is that the analyst was sitting in New York. The CEO mentioned that they were in Ottawa. I think it was for a meeting or a conference. So the analyst then buys a plane ticket, flies up to Ottawa, talks to the founder. And then that was one of the big things to get the deal kind of sealed, just putting that personal touch, meeting face-to-face, and then, explaining the Insight value prop and how excited they were to do the deal. So everything great came out of that. Shopify did decide to raise their Series C that year, and Insight co-led the deal with 100 million, and you can go look up where they're at now. It's huge.
I'm going to talk a little bit about the on-site DGS, which stands for Diligence and Growth Strategy team now. So the on-site DGS analyst joins the process during diligence after the opportunities have been identified. And they also drive value capture after investment. So you can really think about the role as twofold. The first is trying to understand and assess the different opportunities available, find out whether or not they're good. And that involves both quantitative and qualitative research on looking at customer files, cutting data, which basically means analyzing it, building out models, and then also doing competitive and market research. And then also the second part of the role is partnering with our portfolio companies to scale their operations and strategy. So that involves anything from talking with, head of strategy at a portco, maybe portco stands for a portfolio company, to figure out how to grow their product or what markets they potentially might want to expand into, stuff like that. So Insight Onsite is very important to our value proposition as an investor and to kind of like what we're offering these various startups, because we have different centers of excellence, basically talent, product and tech, marketing, business development, sales, strategy, and M&A. And our focus here is essentially helping these portfolio companies grow and continue to drive their sales, continue to grow their employee base, continue to drive their impact on whatever markets they're touching. And we're with them every step of the way. And so as a DGS analyst, you're a member of the team, and you have the opportunity to work with a bunch of these different centers of excellence that are part of Onsite as you work and advise these portfolio companies. So here's a really interesting case study. It's Qualtrics, which is an experience management software company some of you may or may not have heard of. But in 2014, Insight was contemplating a $150 million investment in the company, but the team had some serious diligence questions, particularly surrounding how is this product differentiated? What are the competitors looking like? How large is the market opportunity? And a on-site DGS analyst basically dug in here and really got to understand the space extremely well and helped drive the investment thesis. And Insight eventually ultimately made the deal. 4 years later, Qualtrics was sold in 2018, and it was the largest VC-backed software acquisition at the time at $8 billion. So talking a little bit about the path ahead, what's incredible about working at Insight is that it's because of the diverse skill set you get, as Michael mentioned, you really have a lot of room for growth, both internally as well as like looking externally toward other companies or doing your own thing. So just as an example, a lot of people at Insight have gone on to top tier grad schools. They've started their own companies. They've gone on to work for portfolio companies. They've also gone up internally, as Michael mentioned, a analyst who sourced Shopify is now an MD. So Insight really cares about cultivating and developing its employees and making sure they can reach their full potential, whether that means working at Insight or opening doors to other incredible opportunities as well down the line.
So yeah, to wrap things up, we'll kind of just cover next steps from here. So all analysts at Insight, if I could distill it into 4 kind of key character traits, a lot of people here just love learning about new tech businesses. So, the same types of people who would read TechCrunch, see what kind of like cool companies in the news, see what they're doing, see what they're building. They love looking at opportunities to kind of go on a fast career trajectory at the very start. So in my opinion, having a little more optionality than investment banking, which is what I've heard is kind of the main reason to pursue IB. A big one too is being excited about working with entrepreneurs. So a major part of the day is just talking to founders. So it can be getting information for an investment, establishing a relationship, or if it's more of a personal connection, helping them out with their go-to-market strategy. What should they do next? What types of things should they implement into their product to help customer retention? So things like that. And then the last thing is just people who are really intelligent, self-motivated, and love spending time kind of thinking on their own, developing investment theses and working from there. So yeah, basically kind of what I just touched on, but what Insight really looks for in candidates are people who are problem solvers, self-starters, have a lot of initiative, are professionally ready, and then cultural fit. So I think a really big thing at Insight, which I think is a big difference from banking for sure, is even though the firm has grown, it's still kept that like small team, close-knit family feel. So I just love working at the firm where a lot of people kind of work the same in same ways that I do, but at the same time also have different perspectives on a lot of different things. So you're able to learn every day, but mesh well with the people who work here and kind of perform super well as a team. Going on like the professional readiness, just that autonomy lends itself really well to people who have great time management, being able to speak really well, pitch to founders, pitch to our MDs, just being able to kind of handle your own in an intense environment. And then that initiative and problem solving is just working through business models, reaching out to founders, understanding why one company would work and why another wouldn't, figuring out what the next great market is to look at. So I think these are just 4 big things that Insight looks for.
Awesome. One really quick before we jump into the Q&A portion, I just want to go over really high level our applications process and what our recruiting timeline looks like. So all of our applications are currently posted. If you haven't already applied and you're interested, definitely encourage that you get your information in as soon as possible. So the first step is we're recruiting for our 2022 Inclusion by Insight Summit, which is a 2-day sophomore diversity event that we're hosting March 17th and 18th. And it's really just a great opportunity for you all to learn a little bit more about the venture capital private equity space. We'll be hosting various events with the on-site DGS team and the investment team. We'll even be looping in our some of our portfolio companies to host senior speaker series, workshops, networking events. Really all around just a great event. So definitely encourage you all to submit your materials if you're interested. And then our summer analyst applications are also open, and we're reviewing those applications on a rolling basis. In order to complete your application, you'll be asked to submit a copy of your resume, transcripts, complete a higher view video, and then a predictive assessment. And we'll be hosting our first super day for the summer analyst program in April, and then we'll host 1 or 2 super days a month thereafter until we fill our class. And then for the on-site DGS team, so they actually run their own recruiting process, but that usually takes place closer to middle of the summer, end of the summer, once the summer interns kind of have a better idea of like where they're returning full-time, because the on-site DGS team doesn't have a summer internship program. It's all full-time roles. But with that, if anybody has any questions, feel free to shoot me an email. My email is irodriguez@insightpartners.com. So always happy to answer any questions on our timeline and process. But with that, I think we can open it up to Q&A. And I see that we have a few questions in the Q&A box. So I think we can just scroll through and answer top to bottom. So the first question is, what catalysts do you look for in companies to potentially invest?
Yeah, I can take this one, and then obviously feel free to jump in, Michael. Just to understand this, when you say catalysts, I'm going to interpret that as like what factors we look for in companies to potentially invest. And it's a mix of quantitative and qualitative, but the key here is digging in really deep. So on the qualitative side, you have everything from understanding the market landscape. What are some macro trends that are affecting this market, understanding the competitive landscape, understanding how customers are interacting with the product, what they think about the product, what this means for the company. On the quantitative side, you have things like the actual customer data. So, how is revenue trending? How is retention looking? Are customers staying over time? Is the product getting better in terms of like the overall metrics? So we could talk about this on, and it's unique to each business model as well. I mean, Insight invests in both consumer companies as well as B2B. So you can get really deep here, but yeah, the key here is like we go super deep in basically every facet of the investment.
Yeah, Troy, a great answer. Really, the only thing I would add on is from a metrics perspective, the 2 things Insight really looks for, given their history and growth equity, or being like a scale-up company, is traction and momentum. So after a company has their like product market fit, they understand who they're selling to, they understand that there's demand for their product, and the speed behind it is picking up. Those are kind of the 2 big areas that we know a company's ready for Insight to invest in, and we can kind of just latch on, support, and get them to a great exit.
Awesome. Next question is, what are some analytic skills you had to learn that are specifically applicable to analysis to analyze software companies?
Yeah, this is a great one. Software is such a unique business model, especially recently. 10, 20 years ago, you could go to Costco and pick up your, a box of your Microsoft Office or Microsoft PowerPoint. but software is transitioning to what's called like a subscription model. So basically, if you're familiar with Spotify or Netflix, paying on a per month basis. And because of that new shift in the business model, there's tons of new ways to think about it. Like Michael mentioned, traction is really important. Momentum, what's the growth rate? How is revenue trending year over year? New user acquisitions, and thinking about this as far as the tools we use everything from Excel to this thing called Alteryx, which is a programming language. Some people even use Python, but people have their preferences for how they analyze things, and generally Excel is the standard here for modeling.
Yeah, I think it's also worth noting just at the beginning of the summer internship, you have modeling sessions where you're, really help to learn the modeling skills a little bit. And you also are able to get to classes by one of the higher level people at Insight who kind of goes through different metrics they look for when kind of analyzing software companies and how to kind of think about specifically to software companies, what we're looking for when we're on the phones with these founders and how we can kind of, how we can use those skills to be better at our jobs.
Awesome. And then next question is, how do you develop deep expertise in the investments that you're actively involved in?
I think that one is just spending time. The first order is just talking to a lot of founders in the same market, because when you start to hear a lot of similar stories, you get to understand what the business model really is after hearing it X amount of times. But then a lot of it is also on the analyst individually. So doing your own research, looking at different market maps, going to, Crunchbase to look at comparable companies, going to CB Insights to read different articles or different like old investment memos that have been written and published. So it's just a lot of time spent researching from different areas, which I think is pretty interesting.
All right, next question. What are some best practices the analyst is, oh wait, I think we already answered this one. What are some of your favorite tech podcast and newsletters?
I read Stratechery. Sastrix is a good one as well. I think Matt Levine, it's Money Talks, I believe. And then the All In podcast is pretty good to listen to.
Yeah, all of those are good. And then Not Boring by Packy McCormick is pretty good. TechCrunch is always solid. And then 20-Minute VC is a pretty good podcast.
Yeah, those are great. I also love Axios Pro Rata, just giving you the news on kind of the latest deals and what's happening in the markets.
This one's an interesting one. It's directed towards you, Michael. How has consulting helped you in your investment analyst role?
I would say consulting probably helps more with like the idea generation part of it. Investment banking was really helpful, like just spending a lot of time in Excel, a lot of time in PowerPoint, like understanding how to work with financial data. But the consulting process of like thinking through a market, understanding like what's going on, what are the factors, what are the like Porter's 5 forces, I think was one of the first things we learned. So being able to kind of put all those together and understand like the bigger picture of what's going on, instead of just being kind of stuck to like an income statement or looking at a company's, annual recurring revenue metrics. So idea generation for sure.
And then do analysts have conversations on risk management in the corporate level with the companies they are analyzing?
Yeah, so if by risk management you just mean like synonymous for business strategy as a whole, of course. I don't know the number off the top of my head, but majority of startups don't make it to, a fantastic exit. So it's always a game of figuring out, how aggressive can you be? How conservative should you be? Should you go into this new market? Should you focus on upselling current customers? Should you try to acquire new ones? So it's always a fine balance of understanding how risky new strategy should be. I wouldn't say it's the first conversation we have with portfolio companies, but it's definitely one of them.
And then just talking about what the benefits are of working in venture capital as opposed to working in consulting or investment banking.
Yeah, so I think the biggest benefit, at least for me, everyone else might have a different answer, is I knew I wanted to end up in venture anyway. So being able to start at Insight and not having to spend 2 years in investment banking, possibly 2 years in business school, and then go into venture was a big deal because that's 4 years I got back. But at the same hand, it's, in my opinion, again, more fun to talk to founders, be able to sit and like develop your own thesis, like kind of be the person who's championing something and having other people come to you with questions, as opposed to investment banking where you kind of just sit in Excel all day. That was the big one for me.
I think also, if I could just hop in here, I think a big thing I see is just you can really focus on what you want to focus on and your passions. It's really up to you. Like my first year analyst, Madeline, is super into climate tech, and that wasn't something that Insight was doing a lot. And she really was, took the lead on it. And we just made our first climate tech investment because of her last week. So she, she loved it and she went for it. Same thing with my associate, Bradford. He's super into music. And through him, we just invested. We bought out a company, DistroKid, a music tech company, for $1.2 billion. So it really has, for like a 22, 23-year-old to have that much impact where you're, putting $1 billion somewhere because they found something, it's remarkable. And you can really use your passions, and kind of go after what you want to go after and have your time for yourself, as opposed to just kind of being told what to do, what jobs to do, and when to do it.
Awesome. And then for those who are interning in investment banking this summer, but want to eventually transition to private equity for full-time, what is your advice on how to make that switch and what to prepare for?
Mainly, I just focus on, getting through the summer for sure, but getting the technicals and quantitative skills down, because if you're able to do it in banking, you'll be able to do it in venture. But I would not let yourself get too reliant on making all of your decisions like through Excel and through data, and not being able to kind of develop why something should grow if you don't have the data for it. Like, we're working with early companies here. We don't have the same level of historical information that we do when we're working with companies in banking. So don't let yourself get too like tethered to needing a data room, to sitting in Excel forever, to being able to build 6 different models on a huge scenario analysis, because that could hamper you in venture. But just develop the strong technicals during your summer, and I would just read about the industry.
And then this one's geared towards you, Troy. So what is the similarity and differences between the role the DGS team plays and that of another consulting firm?
Yeah, I love this question. I was actually very interested in consulting, and I applied to consulting roles as well, but then I got the DGS role, and I knew right away that this is where I wanted to be. At a high level, what you're looking at is a completely different space, right? In consulting, most of the time you're going to be consulting for older legacy companies that are very big, but are not, growing nearly as fast as companies in the software growth space. So you're looking at a really, really interesting and dynamic market, first of all. In terms of the actual role, because the role is twofold, you're not only, I guess you could say, consulting for your portfolio companies, you're also doing diligence on investments and helping solidify an investment thesis and decide whether or not something is a good investment or not. So the addition of that other aspect of the role sort of expands your breadth of expertise.
Awesome. And then with the deal timeline being a lot more compressed nowadays, how does Insight continue to conduct the necessary amount of due diligence before writing checks?
Well, one, I think that kind of plays into the model of talking to founders a lot before they're raising. We're able to get a lot of kind of base level info, understanding the business, understanding the market before a company goes out for a fundraise. I think that's pretty important. And then if that established relationship is there and we reach out and they say, hey, we're going to kick off in 2 weeks or kick off in a week, we'll be able to already have done all the market work, understand what the founder's doing, understand what they're trying to solve for, and then just focus on cutting the data, building out evaluation, and moving as quick as we can.
Cool. And then besides competitive financing, how do you guys how do we convince startups and targets to go with you and not traditional standstill road firms?
Yeah, so I think the big one is definitely our on-site team, which Troy's a part of and has talked about. And I think that alone, along with the relationship building part, but having that like dedicated support network and being able to ping someone in the on-site team to solve any amount of like critical problems in a portfolio company is a huge difference. We're not so hands-on to micromanage founders, but if they've got an issue, they know they can reach out to whoever they're in contact with at Insight to get someone from the DGS team to work with them, help them out through whatever roadblock they're hitting, and just keep moving forward, which I don't think is really offered at every firm out there.
And just to add on to that, Insight is a massive fund. We have a lot of money and we're ready to deploy that money. So we're basically capable of supporting founders and their companies at every stage of the investment lifecycle, as early as Series A all the way to post IPO in some cases. And so not only having that operational support on hand when these founders need it, but also the assurance that if they continue to do well, we're ready to back them.
Also, because our portfolio is so large, we've seen so many different type of companies, and oftentimes the companies that are kind of coming through are quite relatable to some that we already work with or have worked with. So we're able to kind of use that expertise to help kind of the future companies, and it's definitely a big swayer when we're kind of thinking about getting deals.
Great. And do you invest in the crypto ecosystem?
Yeah, we're starting. This is very recent and very, very small. But we have a little, I think like 20 or 25 million sub fund. I'm a part of it and just doing more research in the Web3 space. Pretty much seed investing, co-investing with other crypto focused funds. So short answer, yes. Long answer, very new. Still learning a lot. It's an evolving process for sure.
And what is the most difficult part about working at Insight Partners?
I think like it's the other side of that autonomy we were talking about earlier. Not everybody's prepared for how much autonomy like you really have. So if you're not used to setting your own schedule, like being able to not forget tasks, reach out to who you need to reach out to, schedule what you need to schedule, it can be hard or it can be easy to get underwater pretty quick. But I think just like developing that skill will just go a long way.
And then does Insight have a singular flagship fund, or do you break it out by subject? And if the latter, how do you decide how to break it out?
Yeah, so I kind of touched on it with the Web3 answer, but we have, our main flagship fund, and we kind of designate small amounts of capital within that fund to go to different areas. So we have that Web3 team I was talking about. We also have a biotech team that's also fairly new. And the decision process is pretty much just areas we think are breaking out, areas we think are really interesting, or people who have kind of subject matter expertise within the firm and can really help make educated decisions in the space. So yeah.
All right. And then going off the crypto question, does the firm invest in sustainable energy companies, or does it strictly focus on software?
I don't
I
know
think
if
sometimes
we've
those two
done.
can overlap a little bit. Like
Right.
I mentioned it earlier, but my first year analyst who I worked under this past summer is really into climate tech. And that's just a good example of really taking initiative at Insight. If you really wanted to go after a specific area, you really can. And she looked at a lot of climate tech companies, and we did just make our first investment in the space. And I think, I think she wrote an article on the Insight website, which just got posted, and it definitely seemed like a lot more of that, which she's going to be pushing for. And that's just kind of the cool thing about Insight. There was nothing like that before. She's 22, 23 out of college, super into it. And then we just made a big investment in the space. So I think that's just a good example of.
Yeah. And right off of what Josh was saying too, like they don't have to be two separate things. Because right now I'm talking to a company that does like maintenance automation, is building a maintenance automation software for solar power plants. So definitely within the climate tech space. But it's probably not the first thing that would come to mind when someone thinks of climate tech. So, they aren't mutually exclusive, and definitely getting more active in the space.
And by the way, the same thing kind of goes to crypto too, because we also made an investment in a company called TaxBit, which helps companies kind of deal with their cryptocurrency returns, deal with their taxes. We invested $100 million in that. So just kind of how tech and software overlaps with crypto.
And
what is the technical knowledge to excel in this role?
For the investment team, Troy might have a separate answer for the DGS team, but for the investment team, it starts showing through once you're put on a deal process. So I'd say really just understanding your way around Excel, and then with what you're actually working with in Excel, knowing how to understand financials over time, understanding if projections are looking realistic, how a company could achieve those or could not achieve those, what a software company's margin profile is supposed to look like. So just really understanding financial statement analysis for early companies, or as many financial statements as they can have at that point. And then, yeah, just that work in Excel. There might be additional stuff on Troy's DGS side though.
Yeah, so Michael touched on a lot of it. Definitely understanding the financial metrics, the business models of the underlying companies is important, no matter what team you're on. And then obviously we do work in a lot of Excel, and I didn't know Excel prior to coming to Insight actually. So you definitely pick it up as you're there, and people are willing to help you out as long as you're willing to learn. And then also just, more broadly understanding the right kinds of questions to ask, whether founders or customers, to dig in deep into a market and competitive landscape.
Awesome. And then if an Insight company IPOs, does Insight place a representative on the board, or is the goal always to exit before the IPO?
So it depends on the investment, but we usually place either a board member or board observer onto companies we invest in. And we don't really have like a given mandate on exiting before or after IPO. Those just kind of happen organically based on the trajectory of the company, and then what the return profile is going to look like.
Great. And then what is the response rate among analysts when reaching out to founders?
It can depend. You also, this is another interesting thing, is you can reach out to founders like however you want. So you can either sit there and email all day, or you can like find out if they're on Twitter. A lot of younger founders now who are like my age are on Twitter. So usually like I'll reach out, get a pretty high response rate there. And then, yeah, you can get pretty creative with it. The more creative you are, usually the faster is one, and then more is the other one. So response rates can differ for sure, but if you get creative with it, it can be pretty high.
Awesome. And then what advice would you give to someone who doesn't have a background in finance or business, CS major, but wants to get into venture?
I can take this one. I actually forgot to mention this, but I was a CS major in college. And I did like software engineering internships and stuff throughout college, and then decided that I wanted to do more high-level business strategy, but also stay in the technology space. So it's definitely a possibility. I think there was also another question on majors. The key here is that Insight is willing to take people from literally all kinds of majors. Like I had no Excel background, no very minimal like business background prior to Insight. So just demonstrate an interest in software. Make sure that you're learning as much as you can, and when the time comes to show that, like, people are going to judge you based on what you know, not based on what a piece of paper is telling you.
Yeah, totally. I mean, I live that. I'm a public policy major, and kind of seeing my analyst class is everything from public policy to econ to philosophy to engineering. There's no set in stone way to how to be a good analyst, and just got to show your passion for software and some of the other things we kind of talked about on the slides earlier. But they really don't expect you to know that much technical kind of coming into the job, if anything, and you're taught that on the job.
All right, I think we have room for a few of these last questions. But what have you learned about professional relationships in your role?
So I guess taking it two ways. One could be professional relationships with investors, and then the other with founders. It's always on like a person-to-person basis. So more so on the founder than investor side. I've talked to like 20-year-old founders, and then I've talked to 65-year-old founders, and the approach always has to be a little bit differently. You can't treat everything the same, because everyone's a different person to begin with. But a founder who's building in the Web3 space and is like a sophomore in college is going to approach things much differently than someone who worked in banking and then private equity and then manufacturing and is now building a logistics startup. So I think just understanding ways to kind of put your personal touch in every relationship is a big deal. And then professional relationships in regards to other investors, just kind of understanding that you don't need a professional relationship always to have some transaction or end goal. Everybody here is kind of like working in the same space, learning the same stuff. So just reaching out, like being helpful in any way you can is pretty important. And I would say that goes just such a long way, much further than trying to, just meet someone to network and, make it transactional.
Awesome. And then how does the acquisition of I'm definitely mispronouncing it, Wandelbots affect the firm's long-term goals?
Yeah, great question. So first of all, we didn't quite acquire them. We just made an investment in them. And it's more about how the investment in Wandelbots is representative of Insight's overall goals, which is to invest in highly cutting edge technology companies. Wandelbots, which deals with making robotics programming operating systems for original equipment manufacturers. That was a mouthful for sure. Is basically doing that. They're trying to revolutionize the way a legacy industry is working, and they're doing that with robots, which is incredibly exciting. And the other question I think we can tie to this, which is how do you evaluate companies in foreign markets? Wandelbots is actually a perfect example of this because they're based in Dresden, Germany. And I was working on the team that made the investment. And language barrier is probably the key here. It's difficult to talk to customers of the product, and understanding how customers feel about a product or business is really central to how we analyze these companies from a qualitative standpoint. So I would definitely say language barrier.
I think it's also really interesting too. I remember talking to someone on the consulting side this summer who works, with all of our different companies across all different regions, and kind of going back to how to deal with different people. And he said, like, when he worked with the German companies, for example, he's quite cautious with, how he criticizes them, how he gives them kind of how to improve and whatnot, as opposed to maybe the Israeli companies. He'd be like, that culture, for whatever reason, he says, you can just tell them straight up, this is not good, fix this, fix that, and they take it much better. So it's just thinking about, and Michael kind of went on earlier, 25-year-old versus 60-year-old, just thinking about, who they are and how to relate to them best.
Great. And then how do you guys stave off stagnancy in performance as the fund grows larger? I'm aware that as funds reach each critical mass, their returns plateau.
Yeah, so I think, one of the big things we do here is starting that Web3 biotech fund, just looking in new spaces instead of staying a strictly software investor as everybody else is becoming a software investor, is number one. Number two is, as our fund is growing, we are still being very diligent about who we're investing in, trying to maintain the returns profile we've had since the company was founded. Just because the fund grows doesn't mean we can just start investing whatever we want to invest in. The bar is still really high. A lot of companies get turned away at IC because they don't meet our metrics. And just staying precise about what we're investing in, I think, is always really important.
And then roughly what % of Insight's investments end up becoming profitable for the firm at exit?
I don't know a % number, like based off of number of portfolio companies. But I want to say our money on money and IRR multiples are pretty high industry wide. Yeah, I don't know the specific number in return.
I think, Michael, I remember seeing this number
value.
this summer. Sorry, I think I remember seeing the number this summer about like 80% of deals, 80 to 90% of deals are good.
And then how do you manage deal flow for all of the company's potential investments?
Yeah, so I think that's just a function of the analyst job. All the analysts are pretty much covering everything that we cover, and staying organized, I think, is a big recurring theme here. Just staying organized, staying on top of who you're talking to, making sure that you're raising the right companies to, like, your associates, your VPs, the rest of the team, and just having people help you keep tabs on everything that's going on, setting reminders on when to reach out to people, keeping your calendar organized. And yeah, that's kind of the point of the analyst job.
And then talking about the relationship between the investment analyst and the DGS analyst and how you guys work together.
Yeah, so from the investment side, we'll initiate stuff with companies, you know, talk to founders, so on and so forth. Sometimes I've known like a couple of DGS people will get involved on the sourcing side when they have market expertise, like when they know the founder, have really, really great things to add to the calls. That's happened a handful of times. And then when deals go live, that's usually when the investment in DGS team gets together. Like Troy mentioned with Wandelbots, everybody kind of gets looped in to really help out on executing the deal, just supporting each other throughout the process and making sure nobody gets overwhelmed.
Awesome. And then has Insight explored opportunities in the rapidly growing Web3 metaverse space that everyone's talking about today?
Yeah, exploring. Yeah, we'll see. We'll see.
As an analyst, how often might you be in contact with your supervising associate or other analyst?
Like every day. You know, I'd say that's a really big positive here. That's how it was for me in banking too. Don't know if that's how it is for everybody though. But whenever I need anything, I can just like text my VP. You know, then the analyst above me, we talk pretty much every day. You know, since we're doing hybrid work right now, we'll even hang out like 3, 4, 5 times a week. You know, we're not doing anything. So that's I think a big positive insight is it's really easy to kind of stay connected, talk to a lot of people you're working with because you're not getting buried in just like mountains of work.
Yeah, and I think just on that, I found it to be one of the best parts of just the job this summer. There's 13 other, you know, summers and analysts with you who are awesome, and people above you who want to help. You know, my first year analyst, I would message her. She'd go into the details, you know, before I pitched to people above, and you know, went through it, how it can be better, and really helped with everything I could ask for. Just like stupid questions, everything, just ask me, Josh. And she was just super helpful with everything. And my associate Bradford, we were FaceTiming. That's how we communicated all the time. And he was away the whole summer, but he, you know, it was a mostly virtual internship. But when he came back, we made sure to spend the time together outside and just talk about stuff even bigger than Insight, life advice, mentorship. I mean, he really became a real mentor to me over the summer. We just caught up yesterday and talked to him for like 45 minutes just about life and kind of where I am in my semester. And you know, these relationships at Insight are incredible and made the job so much more enjoyable for me.
All right. I think that is, we can answer one last question about what are some deals the firm has passed up on that eventually went on to become very successful. Any lessons that you may have drawn from these situations?
I can just say, kind of talking about Bradford, he always jokes as a summer analyst, he pitched StockX to Devin, one of our main partners, and we didn't end up going for it, but so he kind of still jokes at Devin about that one. But as far as lessons, yeah.
The other famous one we've notoriously passed on is Uber. And the central thesis question of why we passed on them was because we thought the market size wasn't large enough. And we were using allegedly the number of taxi drivers in the US as a proxy for how large the market could be, when in reality, Uber not only displaced that market, but they expanded it dramatically. So it just goes to show how important the analysis really is at you know, digging deep into an understanding of like whether or not this business is really viable.
Also, I mean, Insight's investing so much that if you're gonna get down about the ones you missed, it's a tough game to play. I'll put it like that.
All right, guys. Thank you guys so much for joining us. Thank you to our panelists.
Thanks, everyone.